Welcome. In this video, Onyxcoin unlocking is approaching. What will happen? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
First, let's analyze the XEN. One of the technical structures that stands out on the chart is the flag pattern, which typically emerges after a strong price movement and is characterized by a short consolidation phase. The most distinctive feature of this structure is a narrowing triangle or parallel channel appearance following a steep rise or fall. In this narrow range, the price briefly pauses, gathering energy, and then usually breaks out in the direction it came from, initiating a new movement. In the example mentioned, this is a flag pattern that developed following an upward move, and a breakout above the upper boundary of the formation could be a strong signal for a significant rise. A bullish breakout within a flag pattern indicates that the market is already under strong buying pressure. These types of structures often provide important signals to investors when completed with a volume-supported breakout. This is because the pattern itself is known as a continuation pattern. In other words, the price tends to continue in the direction of the original strong movement. In this example, the price approaching the upper trend line of the flag has caught the attention of traders. A close above this line can be interpreted in technical analysis as a strong indication that the trend will gain upward momentum again. The target level of the formation is based on a highly technical and mathematical principle. The distance of the steep move before the flag is added to the current price level after the breakout to calculate the potential target area. Therefore, looking at the price movement observed in the current chart, a significant price target emerges following the breakout using this measurement technique. The technical validity of this target has been tested and confirmed many times in past examples. As a result, an upward breakout of this formation could open the door to potential profit opportunities for investors. Additionally, one of the most impressive aspects of flag patterns is the brief horizontal or slightly sloped consolidation period following a rise, which helps establish a balance between buying and selling. During this period, the price may experience limited pullbacks due to profit-taking by investors, but overall buyers remain dominant. This situation helps the price stay above strong support levels and creates a foundation for the price to move more steadily toward the target after the breakout. In the current situation, the price consolidating within the flag may indicate a healthy digestion phase after the rise. When technical indicators also support the structure, the reliability of the pattern increases further. For example, if volume data shows that volume decreases during the formation and then increases again at the moment of the breakout, this is considered a very positive signal by technical analysts. One of the generally accepted principles in technical analysis is volume confirms the move. That means for the breakout to be effective and lasting, investor interest must also increase. If these conditions are met, the flag pattern is more likely to play out successfully. Another important advantage of the flag pattern is that the target is quite clearly defined in technical terms. This helps investors calculate risk-reward ratios in a healthy way. At the same time, stop-loss levels are typically positioned just below the lower boundary of the formation to minimize risk. In this sense, the flag pattern stands out as a reliable and clearly defined technical structure for both beginner and experienced investors. When examining the current structure on the chart, the price appears to be moving toward the upper boundary of the formation. This may indicate that market sentiment is turning positive, because the price approaching the upper line suggests an increasing probability of a bullish breakout. A breakout that occurs with strong and decisive volume is interpreted by many technical traders as a buy signal. In such cases, market participants tend to increase their positions, which can trigger the price to move rapidly toward the target. Psychologically, these types of structures are also important because when investors have seen similar setups produce successful results in the past, they tend to approach new similar patterns with confidence. This collective mindset can lead to buying surges at the moment of breakout, and these surges can create enough momentum to carry the price toward the formation's targets. This is why technical analysis is not just about lines, but also a language that reflects investor psychology on the charts. In conclusion, the flag pattern holds an important place in technical analysis, and when a bullish breakout occurs, it is highly likely that the price will move toward the defined target. Looking at the current chart analysis, it is observed that the price is approaching the upper boundary of this formation, and a bullish breakout from here contains highly positive technical signals. If this breakout occurs and is supported by volume, the likelihood of a new upward wave beginning, which investors should closely monitor, is high. A well-positioned flag pattern often allows the price to progress in a healthy and controlled manner. This offers potential profit opportunities for investors both in the short and medium term. But we can't make decisions based solely on the pattern and trends. Let's take a look at other metrics as well. Stay tuned.
This current peak region, which stands out as one of the most important technical structures on the chart, comes into focus as a critical resistance level for investors. This peak may have previously limited the price's upward movement and faced some selling pressure. However, the fact that the price is now approaching this level again has brought up the possibility of a breakout, according to technical analysts. This is because levels that acted as resistance in the past can turn into strong support after a successful breakout, potentially paving the way for further upward movement. This current price action could serve as an early signal for the beginning of a new uptrend in the market. Especially if the price breaks above this peak with strong volume, such a breakout may be interpreted by investors as a trend reversal. Creating a new high means that the market has overcome previous selling pressure and that buyers are now taking control. Technically, this signals that the market has gained strong bullish momentum. Therefore, once this level is breached, it is often assumed that there are no significant technical barriers left in front of the price, and investors may begin taking positions for a potential new high. Making a new high is not only technically important, but also a key psychological turning point. Many investors closely watch the previous peak level. If the price surpasses this level and remains above it, it instills confidence among investors and increases interest in the market. So this breakout may not just be a technical move, but also one that shifts market psychology. Especially if this peak is surpassed with volume support, it could indicate the beginning of a new bullish phase in the market. The breakout of such strong technical levels also triggers the psychological effect known as FOMO, fear of missing out. Investors rush to enter positions to avoid missing the move, pushing the price even higher. This type of new peak formation can spark a chain reaction, igniting both a technical and psychological rally. Moreover, many algorithmic trading strategies and large funds consider these breakout zones as buy signals, meaning the market could deepen and buying pressure could increase significantly after this level is broken. In addition, breaking the previous peak can have broader implications across different timeframes. For instance, when a peak on the daily chart is broken, it may signify a continuation pattern on the weekly chart. This is a highly positive signal for medium and long-term investors. As a result, this may be the beginning of a more lasting and healthy uptrend rather than just a short-term rally. The potential for a new high shapes investor expectations and strategies. Many investors use a breakout trade strategy when the price rises above the previous peak. This strategy is based on the assumption that the price will continue upward without retesting the broken level. Therefore, the breakout presents an attractive opportunity for not only short-term investors, but also for swing traders and position traders. It's important to remember that making a new high also increases the likelihood of forming higher lows. This forms the structure of a rising trend as defined in classic technical analysis. In this case, the price starts moving within a strong upward channel, making both higher highs and higher lows. This makes price movements more predictable and healthier. In such a scenario, investors can gradually expand their portfolios by buying at various support levels throughout the trend. On the other hand, confirming this potential breakout requires the price to close above the level for at least a few days, because in some cases, fake breakouts can occur where the price briefly rises above resistance but then falls back below it. In such scenarios, the price holding above the level strengthens the breakout's reliability and provides additional confidence to investors. A breakout supported by increasing volume especially minimizes the likelihood of it being false. In conclusion, breaking through and holding above the current peak is a positive development from technical, psychological, and strategic perspectives. This breakout may not only be a short-term spike, but also a signal of a new era in the market. Investors should be cautious at these levels and closely monitor price action, trading volume, and other technical indicators, because such breakouts can create rare opportunities and, when approached with the right strategy, offer significant profit potential. The price settling above this resistance level may not only signal a new high, but also clearly indicate that the bull market is continuing.
The 296 million token unlock of XCN scheduled for August represents approximately 0.86% of the current total supply. While this percentage may seem relatively low at first glance, the impact of supply increasing events like token unlocks in the cryptocurrency markets should not be evaluated solely based on percentage figures. Instead, factors such as timing, investor psychology, and overall market conditions must also be taken into account. Initially, since the amount being unlocked is small, it may not trigger an immediate and sharp price drop. However, its medium-term impact potential should not be overlooked. First of all, a token unlock means the release of previously non-circulating tokens into the market. Who receives these tokens or who controls them is highly significant. If the unlocked tokens are allocated to team members, advisors, or private investors, the likelihood of them selling into the market increases. Especially if the token has experienced a price increase, the motivation for profit-taking becomes even stronger. At this point, the key question for XCN investors becomes, will these unlocked tokens be sold or held? Even if the likelihood of selling pressure is low, the mere possibility of such an unlock can create uncertainty and caution in the minds of investors. Psychological factors play a major role in crypto markets. If a large portion of investors believes these tokens will be sold, downward pressure on price can emerge even before any actual selling occurs. This may cause prices to dip slightly or cause upward momentum to weaken. The spread of the unlock news and discussion on social media can further amplify this effect. The overall market conditions in the month of the unlock will also be a significant factor. For example, if Bitcoin and Ethereum are in an uptrend during that period, interest in altcoins tends to increase, and the impact of the unlock may be softened. On the other hand, if the market is generally in a downtrend when the XCN unlock occurs, investors may perceive it more negatively, and selling pressure could be triggered more quickly. Therefore, the unlock's impact should be evaluated not just in the context of XCN, but also within the broader crypto market. Another important factor is how frequently these unlocks occur. If previous unlocks of similar scale have taken place for XCN and did not result in significant price drops, investors may view this one more neutrally. However, if this is part of a larger unlock that hasn't occurred in a long time, its impact on price may be more pronounced. The intended use of the unlocked tokens is also critical. If they are to be used for liquidity support or staking pools, functions that add value to the project, they may be viewed as a positive development rather than a threat of selling pressure. The perception of this development by the XCN community is also crucial. If the community has confidence in the project and maintains a long-term perspective, news of a token unlock might only have a temporary effect on price and lose significance over time. However, if a significant portion of the community is focused on short-term gains, this unlock could create a more negative sentiment. At this point, social media sentiment analysis, community feedback, and investor outlook become increasingly important. If the XCN project has officially announced the unlock transparently and provided detailed information, it may help build trust. Moreover, does this token unlock align with the project's future plans? For example, if the unlocked tokens are allocated to ecosystem development funds, exchange listings, or new partnerships, the event may be perceived positively. When investors understand that these tokens will be used to grow the project rather than for selling, the unlock could be seen as an opportunity rather than a threat. On the other hand, if the tokens are sent to random addresses or unknown wallets, it could undermine investor confidence. Timing is also critical here. August is part of the summer season, when trading volumes in the crypto market are generally lower. This can increase the potential impact of a token unlock on price, as lower volume makes the market more vulnerable to large sell-offs. Therefore, liquidity levels for XCN in August should be closely monitored. If major investors are less active during the summer, even a small sale could cause a significant drop in price. Lastly, from a technical analysis perspective, it is important to observe how the market is pricing in this unlock. If the price has already seen a strong rally and the unlock coincides with the resistance area, selling may be triggered. On the other hand, if the price is in a downtrend and near bottom zones when the unlock occurs, its impact may be limited. In some cases, such scenarios may even be seen as buying opportunities. For all these reasons, the 0.86% token unlock of XCN scheduled for August is not just a simple number. Its impact will depend on when, how, to whom, for what purpose, and under what market conditions the unlock is executed. When combined with the psychological effect on investors, the timing of the unlock, the distribution addresses of the tokens, and overall market sentiment, the short and medium-term impact on XCN's price can be better assessed. While the unlock alone may not seem large enough to cause panic, developments should be closely monitored, transparency should be expected from the project team, and investment decisions should be made based on a holistic analysis.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.